Hello guys, glad to have you on board again today. So for those of you who haven't watched yesterday's video, I'm taking some vacation starting early tomorrow, so there will be no shows tomorrow, and I'll resume not the next Monday, but the one following. If my memory is right, it's the 9th of September, something like that. I'm not going to take my laptop, which means I'm hardly going to be able to like post you some charts, give you some tradable systems notifications in Discord and stuff like that. I'll obviously follow up the markets because it has that freaking nasty trend to somehow move when I'm on vacations. So we'll see if this time is another of those previous times in which I decided to take a week off and the market suddenly decided to go crazy fucking volatile and trigger my scenarios. So anyway, vacations for a trader doesn't mean off the grid and I'm not going to trade. Obviously I will trade. The thing is that in here not taking the computer with me means I'll be less available to share my actions with you. I'll try to do as much as possible throughout the cell phone and at least try to tell you what major decisions I might be taking. But I would like to introduce most of them now, right now, right here, so we can at least prepare for most of the eventualities. And if anything has to be triggered, then as I won't be able to share you charts and stuff like that because we can barely see on the smartphones, but I'd like you guys to be prepared. So if any scenario has to be triggered early or something like that, you know what kind of scenario we're talking about. Let's call today's session as a reference of what might be coming ahead if we do have some strong volatility. So obviously that doesn't mean this will happen, so don't take me wrong in here. It absolutely is important that you guys understand that I'm preparing you for the worst, but probably nothing may happen. So if nothing just happens, then fine. You do your usual daily routines and stuff like that. All right. So really important. Starting cryptocurrencies, I somehow do not expect volatility there. I can hardly explain why, because if we would have such thing, then we would typically have closed below the context in here, which we didn't, which means we tried to dip below. Yes, we did, but every time we tried, we get to close higher than the context. Every time, like we tried, closed in here, tried, broke it down, but closed in here. And yes, sure, we've rejected the bearish resistant context. That would definitely mean something. That would be typically a bearish range structure. But the problem is, normally we need to close below the fucking support context and maintain the resistant context on the opposite direction. That's what shifts a range to the downside. So in order to get to this area, we would have required somehow that one of those two dips maintaining the candle close. And I don't see that, which means something doesn't play according to the rules. Remember that if we just scroll back in time to what I've done regarding cryptocurrencies, especially Bitcoin, I was crazy, not crazy, well, I was more bearish back in those days when I thought we would be ready to trigger a speculative crash, meaning that we've got liquidity issues in here, dead cat bound structure, and then the market falling again generally signals the high level of risk for a potential crashing structure. But actually it didn't happen. In here something unexpected showed up, because to me everything was according to the plan until this day. We find that resistance, and instead of reactivating, we started breaking. So I just gave a little room for the market to work this area, so not putting a stop loss in here. But at some point I had to trigger, and I've been triggered at 11.6, which was crazy fucking far away. I never thought we would ever be there. So showing that the bulls have been showing some strength, unexpected strength for me, but still it's there. And like I said, I see this same area of interest in here as somehow some bulls are holding to this price. And like I said, this could signal crashing down volatility as well. That doesn't mean this is a bottom. All it says in here is probably investors are supporting those prices, not speculators, investors, those who are showing up for midterm to long-term views. Are they going to be proven right or wrong? Who goddamn knows? And certainly not me. All I can tell you is that now we've got positive moving averages. And it's a huge difference, which means back in those days when we were creating those accumulations, we had 4 hours negative ranges, moving averages. Let's go 4 hour. It's going to be better for you to figure this out. All right, we had negative moving averages. So now we could have positive support. And that's a big difference. Does that mean you need to press the buying button? Certainly not. Because right now I think we need way more crashing down volatility than we currently have. So what I'm looking forward for actually is just the market dying out there, like drying out, more than just bursting volatility and stuff like that. So remember that the speculative trades I've been taking, ripples and IOTAs and stuff like that, I might consider taking them buy and hold, which means I'm probably going to reduce the leverage, delete the stop losses, and hold them into my hold baggage, into my holding package. So I think that's one of the things I might be doing eventually before leaving, or I think I need a couple more days. I need the weekly candle close. So I think I'll probably do it early next week or during the weekend, trying to probably, eventually switch them to buy and hold. For a simple reason, because if you do speculative trades on a buy and hold area, then you might be subjective to ugly shadows, like ugly shadow candle. You know the drill with those exchanges when they can lack of liquidity. Some speculators want to take advantage of stop loss hunting, and they can be targeting a specific exchange to try triggering some leverage guys, and that's very dangerous, because if you're if you're trading on this exchange and if you put it a stop loss, you're going to be chased and taken down with others, and you definitely don't want that. So I don't want to be among the stupid guys that will be stopped out because they took speculative trades on investing area. Though I'm rather like to remove the stop loss or do something halfway through it, which means not necessarily a buy and hold, which means not necessarily putting the stop loss, deleting entirely the stop loss and saying, all right, I'm never exiting this trade. I think I'll be eventually exiting those trades. I'm talking about the Ethereums, Ripples, and IOTAs I took recently. But like I said, something in between. Not necessarily a buy and hold, but not necessarily remaining speculative positions with a stop loss. Like removing the stop loss, but if we handle daily closes below such levels, I'll probably get to exit those trades. That's pretty much the kind of approach I'm going to get. So the levels I'm going to talk about, obviously Bitcoin is not among the system. I haven't bought Bitcoin so far, but I took Ethereums, and I would say if we take a daily candle close below 177, then I'll suggest that yes, it is about time to get the fuck out, to get better prices later. But if it's just an ugly shadow candle like exchange hunting down or whatever, I don't want to be among those guys. Same thing goes for ripples. If we do handle a daily candle close below 0.24, I'm out. Same thing goes for IOTAs, daily candle close below 0.2330, I'm out. But this is where I had market stop loss right now. I think market stop loss in those areas are not meant to be. What I would like to see in order to do this is I would like us, and I think Ethereum is the most interesting one to do and to trigger those structures. We can clearly see the beautiful triangle in here. All right, let me just gather my usual stuff. All right, so beautiful triangle. Everyone figured it out. The triangle is mature. A, B, C, D, E wave. So if we can have a bullish movement, that's about to come. All right, so if the bulls break it up, fine. But what I expect somehow to happen in here, if we go for some long-term investment, is that obviously anytime I'm going to try to buy, the buy and holders will just sell. All right, they will risk manage and force the price back in here because they want the price to stay here as long as possible. They're just going to flush all the short-term speculators and stuff like that. They're just going to block prices and destroy and crush down volatility. And if such thing happens, like a bullish breakout attempt or a bearish breakout attempt, just pulling back and then volatility contraction, then that's the best case scenario. What I'd like to see is actually both ways, going up, down, and then crashing again the volatility. That would be great, signaling that the market doesn't want to break a hesitation structure, wants to stay into hesitation area, execute a lot of volume in those areas. That's exactly the kind of stuff I'd like to see. For now, who knows? All right, so I must be honest, I don't know a goddamn shit about what's going to happen. Are those triangles going to be broken and trigger some trend trades? Maybe. Are those triangles going to trigger false breakouts and then neutralize volatility? I think yes, that's what I favor. That doesn't mean it's what's going to happen. But I just want to be, and just want to make sure that I'm not going to be stupidly stopped out by a candle just dipping a toe below those levels just to fuck up stop losses. And I don't want to be among those guys. Simple as that. Next, out of cryptocurrencies, the still big fucking mess regarding the stock market. What the hell are we going to be doing here? I think today is going to be the game changer some way. Don't know why, but today is going to be an important session. So let's figure this out on a daily basis. So we've done both ways to start this week. So we've done pretty much a bullish Monday and a bearish Tuesday. So Wednesday is going to choose. We're probably going to oscillate between those 2 days. The question is whether we're going to break the previous day's lows or not. I think we will. And the question is how are we going to react to this tomorrow. So I think today the target is to try to retrace a bit, go lower, and close the day probably lower, and to see what the hell's going to come over this tomorrow. Or we got the most bullish structure in which this is all we can get as bears, and the bulls will try to push higher and get to restore prices to the 29.15 area. Very less likely going to happen to me. If it happens, then that simply means one thing. Then we're back into the fucking resistant context, which means we're back into another fucking range boundary. 1, 2, 3, 4, 5th range boundary, though, if it happens. I personally think it is about time that we reject the trend channel, get back to context, accumulate a bit, and get the fuck down. So for now, we need to wait because nothing is for certain, and we basically have to be real patient. But I personally think it's just a matter of time before we actually get to break down those areas. The range has been bearish polarized, so everything suggests more bearishness. Everything suggests we're going to break down the support context on the 4-hour context, which means 1 hour accumulation, bam, big bearish breakdown down the corner. It's just that, all right, 4-hour is definitely the chart to have a look at. In order of technical perspective, we do have a negative momentum. We just wait for the moment this momentum gets to express itself into an oversold territory. So for now, it's just we're hesitating with the paradigm. We don't want to be too much bearish before it actually shifted. And like I said, it's somehow inevitable. It's just a matter of time. Sooner or later, something is going to break this paradigm. I think Trump messing up with the market the other day is that day in which the market decided that, all right, we're done. You've gone too far. What you just did, it means that you don't get it. I mean, just this Monday is out of every rational context. I mean, Trump's saying that it got cold by the Chinese, and the Chinese government immediately saying this is pure lie, and the market doesn't even surrender the gains. That's absolute craziness. Like right now, we don't nearly give a shit about what's right or what's wrong. We just want anything good to happen, and that's pretty fucking desperate move. Like, if a lie is enough to buy, then why the hell do we have a market? It's no market. Just tell me what price you want and we'll get there first. That's just as crazy as it could be. Like, we're not supposed to price in lies, and especially lies should be wrong-footed, which means what happened should have caused us to break down the support immediately on Tuesday. Or to accelerate on Monday instead of breaking it down and Trump saving with the biggest lie he've ever done. Like, no one fucking called. It just called it, it just invented it, pure and simply, and people just said, all right, let's take that lie because it's not that bad, actually. We want something better, so it's possibly better, even if it's totally artificial, totally built up, then let's take it. Oh my god, no way, that's not how we do price things. That's just the most stupid way of thinking things. Like, all right, if now we can take out lies because that's better than nothing, then all right, then we're in a definitely not, I don't think this thing should even price in. I think whatever Trump says should just be noise, background noise, not something that can move the market 1 or 2% up or down. I think Trump is, we shouldn't even listen to him. The guy is a fucking mess, and still, the day he lost the Congress, we knew he wouldn't do shit till its end, till the end of its mandate. So why the hell are we still taking care of this guy? We shouldn't even listen to him. So that's the moment I'm waiting for. We've been listening to him for very bad reasons, so I think at some point the market will listen to him into some bearish perspective some way. Like, we're going to have to pay for it. Everything goes as counterparts. We've had the best of Trump. Let's hope and brace for the best, for the worst to come, at least for my portfolio. So it's a mess in this area. I'm definitely still bearish. I'm just waiting for this moment we'll get to fuck up this 4-hour context. And obviously when we get to fuck it up, it's extensions of the previous wave that's going to be targeted, and we're probably going to get to reach out to the lower area we've highlighted previously. So this is where the big game happens to me. This area is going to be tricky. So the problem is, like I said, the market has this weird manner of fucking up and be volatile when I get the hell out on vacation. So if it happens again, this is the area when you're gonna have to be real smart, because remember that we deteriorate the trend, the bullish trend, we neutralized it, we're ranging, but the thing is that before getting bearish, we're gonna have to reverse the time frames one by one. The 1-hour chart signals reversed right now. We're bearish in the 1-hour charts. 4-hour is about to be, we're accumulating, though we're going to create and extend the 1-hour bearish trend to a 4-hour probably bearish one as well, and we'll see if this one will trigger the daily chart to reverse. And if the daily chart reverses to bearish trend, we're definitely recessing. All right, so this is where the recession trade plays its game. Not there. I told you, people think this is where the recession gets to be traded or flushed out. This is not. To me, this is where the game happens. So this is where the shit and the manipulation will be at their maximum. So it all depends on what we'll see. Like I told you, it's going to be technical and mostly psychological, because this is what I think this area is mostly going to depend on what the smart money is going to be doing and how they're going to perceive the levels of risk. Because remember that in here, lots of retails have been buying, We know how they will react, all right? If the market dips more than 25 to 30%, they'll sell the shit no matter what. So we know that if there is no support in here, we go for a crash. That's simple as that. If we ever go below this area, it's the minus 40% drop immediately afterwards, because obviously everyone who bought the market top will say, shit, oh my god, I'm ruined, so I need to get the fucking money back, so I want my money. That's the usual stuff, all right? The problem is that doesn't mean it's necessarily going to happen if we do have some support in this area. Meaning if the money supports this area, then the daily chart will support prices. And remember that in here, to go below these levels requires the market to recess, requires the economy to go recession. So this is where we price in, all right, recession trade, probably 40% drop to come afterwards, and probably go down to 2000 area on the SPX. If we can sustain, then we're up for another run, and probably as we're going to have high lows, we're going to probably make higher highs. I think it's the kind of trades that will dampen through time, but probably is going to lead us to Trump's election, right? Like hesitation, but we're not going to go recession. Let's hope and brace for the best. But the thing is, like I said, what's been made have consequences, and the way we priced in those freaking shits and all we've been doing in here gonna have to be paid for and accounted for. And I think in here, if the smart money doesn't buy, I wouldn't be surprised. Like if the smart money says, all right, here I could pay the prices, I could support prices, but I mean, I could get far better discounts if I just buy the dumb money losses. So it's just a choice that they'll have to make. Either we buy in here because the market is still bullish and we don't want to miss the opportunity, or I see the opportunity, but you know what, I'm going to eventually try it out with a few speculative trades, but I'm not going to buy the dip. And if the smart money doesn't hardly buy that dip, which means they don't provide liquidity, enough liquidity to sustain the market in this area, I think they might just say, all right, you know what, with the same amount of money, like let's call that I've got 100 billions to execute, pretty much less than that, but let's say, all right, I've got 3 billions to buy anything in the market, so the apples, the whatever. So either I decide to buy like let's say 100 shares of Apple, all right, and 100 shares of this. All right, if I get to buy in this area, I'm probably gonna get like 150 shares instead of 100 for the same risk. Right, the risk is to buy the fucking dip. So it's always risky, obviously, and in this area, less risks, obviously, and moreover, you know that there will be some guys ready to sell in here because minus 30%, you know that all the guys who bought the market top are going to sell. So you're probably going to have some sellers in here. So the question is how the fuck the market will handle the liquidity in this area. It's going to be crucial for the forthcoming scenarios. The bulls are holding up this area. Then, yeah, I think somehow we can stop selling. At least, I think there's going to be hesitation in here. I'm not saying we're going to go cross lines in here. I think there's going to be a bit of a jitter. But either this jitter will V-shape reverse and will sharply get to this previous level, and that could be the sign of a bullish reactivation. Reason why, if you don't risk manage your bearish trades in here, you might lose the opportunity of the interesting prices to profit take. So there is a mandatory profit taking to perform in here. How much you take in here depends on how much risk assessment you do, what's your risk profile, and what are going to be the fucking signals in this area. And moreover, what's important in here is how does the mentality of the market is. That's the most subjective way of doing things. This is why I would like to be there with you if it happens. I probably won't, or I will try to tell you, obviously, if I have the time to do it. But what you have to look at in those areas, especially how all shares like Apples, and mostly Apples, and Boeings behave. If you see them falling like shit, like in a straight line with interruptions, heavy panic sellings, then buy the fucking dip. Let's be honest, all right? If you see this, I think that's a buying opportunity. Let's go Apple. I'll explain with the charts. I think it's better. So the thing with Apple is, sorry, Apple, not Teslas. So if Apples end up falling like shit next week, like not this, all right, worse than that. Sorry, I just hit the wrong button. So Apple, I have multiple structures. The first one is, all right, this is a speculative crash ongoing, which means we've got the speculative collapse. The speculative crash will come right after with a slower pace and the market oscillating, but always to the downside, all right, until it gets a final burst in here. Then we get the hope phase, generally retracing to this area, and we've got the final way of crashing this market, breaking down the support, probably reaching out to this one. And this is where you want to buy in the long run, and you might have to wait a few years to get to buy Apple. That's one option. Very probable one, all right? We get into a long, deep recession for Apple, not with the global stock market, all right? That simply means Apple time is over. People not buying that shit, but buying other stuff, like the money goes elsewhere, and no one gets the support price, so obviously whoever was stupid enough to buy 220 will be ruined, obviously. Second option, flash crashing structure. And that's what I fear the most right now. That's what I think could be the market structure. If it plunges, like instant plunge, we go from 200 to 100, the market just collapses. We get quote interruptions. People get to fucking panic. but we panic on support areas. And if that thing happened, like we panic a sell on values like Apple's, Microsoft, all the big names fully loaded into the ETFs. Remember that people will sell when they get 30% loss. I never said they're going to sell when the SPX is getting 30% loss, when their asset value loses 30%. So if they bought ETF fully loaded on Apple, on Teslas, on Microsoft, on Facebooks, on Nvidias, on all the shitty names, and if all those shitty names end up losing a 30% streak in a straight fucking line, which may happen, they will sell. And what I care is when they do, because when these guys release is where the smart money will buy. So if we concentrate the energy on a burst of losses in some specific areas, especially the Nasdaqs and stuff like that, the Nasdaq may be on the verge for a huge collapse, but if the SPX somehow sustains, meaning that the smart money doesn't sell at all, but just sells the shit just to pair the gains out of someone else's losses, and most likely the stupid beginners' losses who bought the market top, if they want to profit from their losses, they might be targeting some assets, not necessarily selling at all. And if that's what happens, then yes, if the SPX is there when Apple is bleeding shit and all the big names are bleeding shit, then profit take all of them. Like take the hell out of Apple, take the hell out of Microsoft, profit take all those assets, and eventually start pricing in a huge profit taking, like at least a 50% profit taking on our SPX. Don't take it all out. You don't know what the hell is going to come next. And you certainly don't want to be a buyer of this dip. You just want to sincerely risk manage like 50% profit taken, and you get the hell out of the shares. All right. You still going to maintain bearishness on the stock market, but you don't want to be selling those areas, and you certainly don't want to be selling the Nasdaq. Like I told you, the problem is if those values get the fuck down, the Nasdaq is going to probably suffer this, all right? Like a huge spark, and I think the Nasdaq could be doing this. So here is what I tell you guys to bear in mind. Not saying it happens, I'm saying very less likely to happen, but if it happens, you're going to have to trigger the decent, a smart decision in this area, because those kinds of opportunities, they don't show up often. All right. If you see Nasdaq collapsing with most of its biggest components like Apple's and stuff like that, like getting shit, all the growth values, all the big names collapsing, so everyone says, all right, we're on the verge of a crashing market, whatever, we don't know what the hell is going to happen. If you see everyone getting crazy, and if you see the stock market still holding these supports, and the Nasdaq in this area, all right, in this specific area or close to this area, and if you see the SPX still holding its major support, you're probably going to see the Russell being not that bearish, all right? Like the Russell may be early bleeding, but probably hold up. If it does that, I don't know if it will, but if it does, like the Russell does this and stops, all right? If you have that, all right, the Russell holding to 2016's lows, and you see some bullish opportunities and people panicking on the street, I think, yes, what's the most rational thing to do? Get the hell out of all the big shares selling entries. Just buy yourself out. I'm not saying buy them, all right? All I'm saying is get the hell out of them. Eventually buy a couple ones, like buying Apples or stuff like that. Not necessarily, I don't think Boeing is a good option. I think Amazon's definitely the kind of stuff I would buy. Like I eventually buy Apple and Amazon. Amazon because Amazon, and I think yes, this thing has to be bought. Just like Apple, I will eventually buy it because of the crazy fucking amount of cash they have. They will probably burn it throughout the next few years, which means it's not a long-term investment. It's just, I think, a speculative call to buy Apple just because, yeah, too much cash and I don't know what the hell they'll be doing with it. But like I said, the problem is they've been buybacking way too much, and it's going to cause some volatility. So if that volatility just gets concentrated in a short period of time with panic sellings and retail traders getting to release their entries by a 30% drops in equities, then just buy their shit. All right. That's what I think is going to be the most rational. Don't turn yourself as a bullish on the market. Just remains balanced. But remember that this area is crucial. And if the SPX managed to hold to its lows, like not breaking this, all right? If we get in here, then yes, I think that's great. I think the Nasdaq can definitely break the previous year's lows, but all right, if the S&P is holding this area, yeah, I think we're probably going to have that following. Right, which means that all these oversold apples and stuff like that will be bought by some speculators like me for rebounds. I don't think those values will make historical highs afterwards. I just think those values will probably just stop and range for years. And if they range, and if some oversold areas of the market, like the General Electrics and stuff like that, gets to be bought in the same time, like people getting to value stocks and growth stocks being just slashed and rebouncing because of those overselling conditions, then we'll just have everyone going up. Value stocks being bought, growth stock being bought for rebounces first. Then if we have that, why the hell do you think the stock market will go down? In this is we'll probably get to go bullish. But like I said, I think this is where the decision cluster is, for the SPX at least. And remember that trading is about the SPX. Stock trading is the SPX. It's not the Nasdaq. It's not the Dow Jones. Dow Jones is what every fucking unexperienced investor have a look at in the US. They think the stock market is the Dow Jones. No, it isn't. The stock market is the fucking SPX. The Nasdaq is where the bubble is. So if this one collapses, I'm absolutely fine with that. All right, have a look at the Nikkei as well. I think the Nikkei can be on the verge of a huge collapse as well. Like it's going to be probably, if the yen gets to surge, all right? Remember that currency is negatively impacting. So if the yen is like surging to crazy fucking level in the same time, and we're going to talk about that afterwards, the Nikkei could be one of the most bearish assets on earth regarding equities. Like their equities will be just like a slashing market of showing how fucking far we can go. So in that perspective, I think, yeah, we can. The Nikkei is probably one of those assets that will get to the crazy fucking lows, like probably retracing to 2016. That doesn't mean they'll break the lows. Like I said, I don't think they will. I just think in here what we should, sorry, wrong button, is the extensions. Like you get to take this level down to this one, up to this market top, and you get to say, all right, that's a typical ABC correction, and you target those levels. So if you're low risk, you profit take at 16.8K. If you want to take a little bit more risk, you get to 15.4. I personally think this target, no, not going to happen. So I would target max this area. So I would say I'm going to put, all right, this second part of this show, I'm going to tell you each limit. All right, which means you know I have bearish trades on all those assets, obviously on the yen as well. So all those assets that are yen related, this is what I'm going to be doing. I'm going to tell you limit trades, which means prices in which no matter what the fuck happens, I profit take. So on the Nikkei, I'll buy in here, which means I'm going to put a fucking limit trade in here to profit take if it ever happens. Even if the market is going crazy, whatever, I'm buying myself out of those prices. USD GPY, maximum target, 88. We go there, I'm out. And 97, I'm partially profit taking like 50%, with a limit trade already on the order books. NZD GPY, 56, I'm fucking out. This price, I don't really give a shit. I think this one I'm not even profit taking. I don't put 63 for, all right? CAD yen, we go there, I'm fucking out. 71, I don't want to see anything more than that. We could go lower, we could definitely, yes, this one is an ugly bearish range. Oh, I'm sorry, I should reactivate this one. Oh, no, this one we're gonna go lower. So I need extensions. All right, I think this one is not going to go 100. I think we're going to go on a contractive wave. Yeah, 78.6 is what I want. So my maximum target is this, 67. All right, sorry, I'm going to pause and readjust. Oh, don't forget that when you don't put the profit taking on the levels itself, remember that if we go there, we're going to go there with some panics, which means huge spreads. So take the spread as an accountant, all right? Always put your profit taking slightly higher than the price, otherwise you might not be executed. That's readjusted. Let's talk about our dear friend AUDNZD. It's been reaching out to my expected profit taking area. I'd already triggered my profit taking in here, no problems. All right, we just extended the range to and high, all right? So we make high on the range, but we typically reverse in the 127 to 138% extension. So it's typically in here, this structure, remember two sets of waves, that's a flat, but the structure is either we're gonna be a running flat in here, and we're gonna have to buy this area, or this is going to be an extended flat. Remember that on a flat structure, this is a 3, 3, 5 wave structure, which means this wave in here has to be impactful. It's going to have to feel like bearish. So when you see this thing looks bearish and it's on support areas like typically the Fibonacci's, this is where you want to buy, right? So like I said, I bought myself out just to buy myself in. I'm still bullish on this asset. There's still a lot to come later on. It's just, all right, I am locking on some early gains, waiting for a range to build up. Where am I going to buy this range? As usual, close to Fibonacci retracements. It's simple as that. All right, so I'll obviously have a look at all those supports and all the signals I have on those different support areas to eventually trigger some trades. If we get to surge to the downside in the next following couple days, all right, we're not in the context, so I'm not going to buy the 23%. If that's what's about to come, then I think if we go surging straight right now, it's probably going to be the 38, all right? And probably then in this case, an extended flat, we break the previous resistance, but we're going to break the previous support as well. And it can be 38 or 50%. So if you buy the 38, make sure you put a stop loss not there, but take into account the risk to get 50% as well. All right. Second option is, like I said, the running flat. Let me go crazy in here, and the bulls are supporting prices rapidly and restoring a little bit of bullishness before we actually get to break the resistance. All right. So these are the multiple options. Remember that obviously that's just a risk management. I see absolutely no bearish demand, no bearish signal. So it's just bulls partially profit taking. Like I said, don't take don't take 50% profits on those structures. I barely took 30%. I barely took 25% myself. I took 15%. I might eventually take another 5% today because we go to this extended area, but that's it. Like 20% off, and just to buy in myself in afterwards. Let's make sure those 20% I took off, I'm going to put them in obviously afterwards. All right, as simple as that. And we're investing the gains every time. That's how I do things, at least as long as I see potentials. That's pretty much it. So I know obviously, or Eurodollar and all those stuff, huge deal. So I'm gonna not go Eurodollar, GBP, USD, GPY, or I'm gonna go DXY. It's a shortcut, obviously, but that's how it is. Let's go 4 hour. So as you can see, Wall Street is trying to save the dip once again. Like the Trump thing the other day was it was out of control. It was just a rough path, but we're fine. We're back on track. The track is whatever he does, whatever. It's always going to be America first. Like I told you, America first is just America is going to be the last one to fall, but it's going to be the one to fall the hardest. So I don't think they're going to manage their way out of this, no matter how much Trump tries to sell the shit to people. Like I said, I think we're going to have to at least trigger some panic selling, and it depends on how critical they are and how targeted they are. Like I told you, the smart money is going to buy the retail traders' losses. So either they concentrate to ruin them where they bought the most, and they're going to buy the losses, and then everything's going to be probably fine afterwards. Well, at least we will have flushed the risks. Option number 2, we trigger the panic selling and no one's getting to buy, and the smart money will wait for additional 20% losses in that perspective. So I don't know, like I told you. It's either the smart money is going to buy minus 40% of the broad market losses, or they're going to just buy panic sellings of retail traders. But in order to panic sell, they have to go 30% loss. It's a psychological switch. I can't explain that, but it's something that happens into the fucking human mind. Whenever you get to lose 30% of your capital, you just go crazy. And even if you like it, don't like it, even if you think you're cold-blooded, whatever, 30% losing makes anyone crazy, and especially people who don't know shit about the stock market. So Yes, like I told you, I think this is what the smart money wants to buy. I just don't know how they're going to manage their way into this mess. All right. Uh, anyway, so DXY is obviously the game in between. So I still suspect that if we do have some panics in the US, I think normally the dollar should be fall like shit, like even harder than the stock market, because we're going to have to rise every underlying fears of bankruptcies and systematic issues and stuff like that. And obviously this is where we've got much unpriced in credit risks in the US. All right, so as the things will go down, people will start thinking about recession, so the credit crunch will probably occur. And the problem is, like I said, the Fed will probably cut rates. And that's how smart money will react to this. All right, so either the smart money will say, all right, we've got enough sellers to buy, and the Fed is going to cut rates, so we're going to be fine, and the SPX is probably never going to break its major daily supports. That's scenario number one. Scenario number two, the Feds cut the rates, the market gets crazy about it, and it keeps on selling. And like I said, this decision I think is going to be made by the next Fed meeting early September. So that's the reason why I think we might have early bearish movements getting toward the speculative area I talked to you about, probably when I'm going to be on vacation, or the day or the week right after. So if it's not next week, it's going to be the week right after. But I can hardly think that we're going to stay here where we are currently right now one more week. So dollar, like I said, they're trying to save the dip. So fucking usual triangle. I don't understand how they can manage to do this. I don't know how they managed to save that fucking dip, but they did one more time. So I don't know. I'm still fucking waiting for the moment that this thing will collapse and manage to finally break a support. We've got the bearish momentum. We've got everything we need, but it doesn't happen. So either that's the same old stuff, we're breathing in to just breathe it out in a single burst, or it's not going to happen at all. And I'm just wrong, all right? And we're just going to go dying again in this ugly fucking trend channel. And then we're on the verge for another high, and simple as that. I don't know. All I can tell you is that this area is a huge mess to trade. Because too much geopolitical uncertainty, and that uncertainty just crystallizes in the euro dollar, because it's all about it. Like I told you, it's all about the euro area and how they will handle choosing who's going to be the winner. Euro area is actually the decider. I know most people in the US think that no matter what, they are the ones who decide. You've never been, actually. Just scroll back in time, get to have a fucking look at history. Actually, you've never done anything out of geopolitical choices. Every big war has already been taking place in Europe. It's always about it. It's Europe, whether you like it or not. It's not about importance. It's just we are ruling whoever is the big guy in the earth. And if we're on the verge to switch for China dominance for the decades to follow, then yes, we're the one who's going to choose, and not you guys. I'm sorry to say that, but US think they're the center of the world. In the geopolitical fucking mess, Europe always have been the center of the maze. That doesn't mean we're more important than you. It's not about that, all right? It's not a big game. We're not here to say we've got a bigger one. It's just that's always where the game has been. This is always where the battles have been taking place on the geopolitical version of the world, because it's the east side fighting the west side. It's all of those things being fought into the center stage. We've got Russia's been fighting in Europe. We've got China's been fighting in Europe. Europe is just because, I don't know, it's probably geographical. The location of Europe somehow makes it the center of the maze. And like I said, it's all about major technology systems as well, like 5G or whatever, but just try to piss us off. And you know what the hell's going to happen? We're going to be Chinese 5G and you're dead. So it's simple as that. It's who's going to take the future. And I don't think Trump's way of negotiating is really likely going to work out with the European guys. Simply because the bold way of negotiating is not how we do. I think nowadays Europeans have more to deal with China, even though we know China is not a friend either, right? Like US is not a friend, China is not a friend for Europe. You're both enemies for us. But the thing is that you're also both friends. And like I said, we would rather hope to take the best from both of you. But the problem is China wants want you out and you want them out. And in that perspective, we have to rule this shit out. Like we've always done. We have to find a decent in-between solution in which China is going to be happy and US going to be happy. The problem is your fucking orange president is never going to be happy. Because he just wants China out no matter fucking what, because that's how he is. And like I said, that's the problem. I think the equation has no solution but the US putting down this goddamn president. As long as you've got him, it's going to be offensive forever. And the problem, like I told you, going offensive with Europe is not going to work. We're already recessing, so why the hell? You think you're going to bring us even lower than that? No, you won't, because if you do this, the world is going to be a freaking mess. So you rather want to hope that the euro area isn't going to explode, because if we do, then it's going to be war. But I'm talking about military war. I'm not talking about the pleasant economical war that that I personally expect is the best case scenario. Because we just deal with the problems with the money. Yes, it's disastrous. It creates a huge problems each and every where in the world, because we destroyed the emerging world and everything like that. Yes, but still, we avoid launching missiles to each other, and that's at least not that bad. All right, like I tell, we can fight poverty some way with humanitarian support and stuff like that. We can hardly wake up someone who just been dropped a bomb over its head. So that's the problem, all right? So yeah, I think even if it's ugly anyway, I think economical wars are still better than military wars. I better hope it never go down this path. But still, that's the problem with Trump. That's what I basically fear with that kind of guy, because this guy is never going to surrender. And the problem is that kind of guy is ready to take every action necessary to be right, even if that means crushing down the rest of the world. And that kind of guy generally doesn't last long, but I better hope they get the hell out as fast as possible. So that's not, I have something against Trump. I think Trump is just dangerous for the US. Way too dangerous, because that's not the kind of leader you want into that kind of situation, all right? We would like to have smart guys rather than bold assholes. So anyway, that's it for today. So remember that, oh sorry, no, gold and silver before we get to move on, all right? So the dollar is going to be Trump's mess. So if Trump is in deep shit, which means if people get to lose confidence in Trump, which they will, remember that, like I told you, we're talking about what the hell is going to happen into retail traders' mind. If retail traders see the stock market, not necessarily the broad stock market, but the one they see, the Apples, the Microsoft, if these assets get crazy fucking down with crowd interruptions, huge panic sellings, who the hell do you think they're going to blame? Some people will say, all right, Trump was right, so that's the Fed's problem. So they'll say, all right, that's the Fed who's been causing this shit. Some other people would just say, all right, that's Trump. Either way, the dollar will be the one to pay for it. So if my scenario triggers, the dollar will fall like shit. It will fall like a falling knife, because so many people have been investing in the US thinking it's a safe area. They'll figure out it wasn't, so they'll do what they do. They ask for the money. The problem is, in that context, it destroys a lot of credit, and it destroys a lot of value in this currency. All right? That's not for the worst. Like I said, a dollar going bearish is going to be better for someone else. It's always complex. When something moves, it brings both goods and bads, and that's how it's always going to be. Like, yes, it's obviously going to be bad for the US, but guess who's going to be happy about it? Every emerging country. They're going to say, oh, great, a fucking cheap dollar, so we can finally breathe. And yes, I think that's not the worst case scenario. I think at some point, US has to feel the pain just to... That's the Chinese who've actually been said that. It's about time the US feel the pain. And I think this sentence all by itself is a very strong word. Yes, sure it is. And like I told you, it means China is moving. China is doing and being an actor rather than being a passive third party who's basically been taking the hits one after another without feeling the pain. I think they're starting to fight back, and Like I said, it's not good for the US, not a good sign. If they want the US to feel the pain, they have what they want. They have what they need to do it. So it's just, if your fucking president goes out of control, it might have to be triggering worst case scenarios. If somehow we can handle, but like I said, what happened early Monday is not a good sign. Like Trump getting full lies is not what the Chinese guys likes. If he actually wants to set a deal with China, it's just doing it the wrong possible way. Because he thinks he's going to make a deal to its own condition, to its own needs. He thinks he's got power. It doesn't. The problem is that's not how the fucking world works. And Trump is the worst possible negotiator. That's what I always told you. Trump think is a good guy to deal, is the worst possible. Because he can deal with weaker countries, but he cannot deal with equivalents because he thinks he's stronger than everyone else, as he actually isn't. And that's his biggest problem. He thinks he's going to ban China, but it's not going to happen. It's not. And as long as he will think it that way, we'll just end up in a dead end. That's what you need to figure out. Trump is a problem with China because that's a problem he cannot solve. But the problem is this guy will never surrender, because he sent some promises and he thinks that if he doesn't come up for those promises, he'll be taken as a fool. And the problem is these guys cannot sustain, psychologically speaking, to be taken as fools. And the problem is, every time in history that we've seen some huge level of narcissism up to this, which means it think it needs to alter the reality. It creates its own reality. In its mind, I'm sure he's persuaded, he's almost certain that the Chinese government has called. Fact is that they didn't. But anyway, I think it's true, so I say it. That's how dangerous that is. Because the problem with huge narcissism like he is, it somehow means that the reality at some point is so hard to figure out that you rather like to live in your dreams. And if you do this, then yes, you can be in your dreams, but America won't follow you. That's the problem. America is not about Trump. America is not narcissist. Trump is. And the problem is there is going to be at some point the need to split apart. Either the world will follow Trump into his crazy parabolic scheming structures, or the world would just split and say, all right, Trump, we're enough with you. We're going to let it go. At least we're going to try putting you out, and we'll see. Elections are far, far away from now. And like I told you, if we go scenario A, in which the stock market goes there and gets to survive, then yes, Trump will have the best condition for possibly a re-election. Because in that perspective, the ugliest structure we had would probably be broken to the upside later on, right? If we don't go there, then yes, I'm okay with us breaking up the structure. And in that perspective, yes, we'll have survived a potential crash. But the problem is, before doing it, everyone who bought this top will be ruined. Like I told you, Trump can be right, but still he'll ruin whoever followed his advices. Because that's what he always done with all of its businesses. He always ruined whoever worked with him. So if you follow this shit, like buying the market top, I can't say for sure you're going to lose some money. I just don't know how. Either the worst case scenario, like we go on a long bearish trend, or straight line flashing crashes, specified and concentrated in some areas, just to ruin those guys, and then everything's fine. But anyway, whoever listens to Trump is going to lose money. I'm definitely sure about it. At least not 100% sure, 99% sure. Like, I know those structures. When dumb guys get to buy a market top because someone sold their dreams, generally ends up this way. 30% losses, and whoever's been using leverage is going to take even more than that. Anyway, so maybe next week, not certain about it, but when you have a look at what happens this week, depending on how we close this week, if we get for another bearish week, I think this one is the one that collapses. Like, I don't think that's going to be necessarily this week, but I think next week. If we go for another bearish week, and if we get to close below 28.35, next week is probably the lower shadow one. Like, we go crazy deep in here, and we try to build a buy the dip. All right, so And if it's not, probably the week after. But I think something is going to happen in the short term. The VIX is also suggesting this. So it's all about that, right? Volatility, either we go there and everything is somehow fine, like we get a burst in volatility, but we somehow hold it. And yes, actually take the VIX, all right? I think the VIX is the third part of this equation. Like, remember that I said if we concentrate the risk taking, the risk bursting, and we fuck up the NASDAQs and Dow Jones, but the SPX broader market somehow doesn't lose that much, all right? And if the Russell is lagging in terms of loss taking, then if you see, like I said, the SPX in its technical area and the VIX being 47 at the same time, like I said, buy the fucking dip or sell the volatility. All right, because I think at this stage, buying the stock market is going to be interesting. But you need to be in this area, like still on top of the previous high. All right, if you're here and if you see the ugly VIX triangle out of 50, just because if we go there straight line, the VIX is going to explode. But if it explodes, gets to 50, and if we're trading this area, really take a 50% profit on your short entries on SPX. Don't forget to profit take the Apples, Microsoft. We'll eventually sell them right after. We'll eventually sell them later on pullbacks or whatever, but just profit take those assets, all right? So like I told you, Apples, put some profit taking in those areas. If we ever get to 116 or stuff like that, we get there, all right? In a very short term, cataclysmic solution, just get the hell out. Just profit take. Don't target the 90s. We'll eventually do this in a second stage, but it's going to be too bearish. All right. If it goes really too bearish and on those specified assets, I think that's going to be enough to flush out the risk. All right. Anyway, I think you got the point. All right. So have a look at all the reds I've got in here. Not necessarily Boeing, but I think Boeing can be among the losers, obviously. Simply because this is where the most systematic risk can show up, like 30% drawdowns in just a few days will create the cataclysmic effect I'm looking forward for. Obviously, WTI should be probably falling like a knife, probably heading toward 38. I'm not saying 38 could be a buy. It could be eventually if we're on the verge for the bullish reactivation I'm talking about. But if we're on the verge of a total collapse, then it's probably 25 or eventually even below this low. For a short time, obviously, but 25, 24, and we buy this area. All right, so same thing as the stock market. The two major clusters are in here and in here. And I don't know which one is going to target. It all depends on what type of assets are triggered and how much does the dumb money will sell. Bye, guys.